Hey friends, welcome back to the Chris Chow Show, where I talk about personal finance, investing and saving money. A very common question that a lot of beginner investors ask is, what is an ETF? Well, in this video, I'm going to explain to you exactly what an ETF is. I'm also going to talk about the different kinds of ETFs there are, as well as the pros and cons of investing in an ETF, how to invest in an ETF, and also which ETFs I personally own. So what is an ETF? Well, ETF stands for Exchange Traded Fund. And they're an investment fund that has been listed on a stock exchange. This means you can trade them like you would normal stocks or shares in a company such as Telstra or Combank. An easy way to wrap your head around ETFs is to imagine ETFs as baskets, and each basket has different assets inside them. So for example, a technology ETF or a basket would have shares in tech companies such as Google or Amazon. Maybe you're like Golem from Lord of the Rings and you love gold. Well, there's a gold ETF or basket which has shares in physical gold. Each ETF listed in Australia has an Australian Stock Exchange code. For example, VAS is for Vanguard Australian Shares Index, NDQ is for Beta Shares Nasdaq 100 ETF. ETFs can be divided into passive and active. We'll start with the passive ETFs. Passive ETFs typically track an index, and the fund is updated regularly, usually every quarter, to reflect changes in that index. Wait, what's an index? An index essentially tracks the performance of a group of assets, such as a group of shares. Let's use Australia's most well-known index, the ASX 200, as an example. The ASX 200 consists of 200 biggest listed companies in Australia. It's usually the one mentioned on the 6 p.m. news whenever they talk about stock market or shares. If you invested in the ETF that tracks the ASX 200, its price would either increase or decrease, depending on the movements in the index. So back in March 2020, when the pandemic happened and the ASX 200 plummeted, the price of your ETF would have also dropped. Active ETFs, on the other hand, are managed by a portfolio manager who actively manages the basket of underlying stocks with the aim of beating the market. I know that was a lot to take in, so let's take a short break by hitting the like button. This will help me out tremendously and let more people see this video so they can learn about ETFs. ETFs aren't just for Australian shares. You can use ETFs to invest in international shares, bonds, property, precious metals like gold and silver, commodities, and even foreign currencies. You can also invest in different sectors of the stock market, such as banking or technology. There's also ETFs for different regions of the world, such as Europe, or individual countries such as Korea or Germany. You can even invest in certain topics or themes like AI or consumer staples. And more recently, there's environmentally responsible ETFs that purposely exclude listed companies that are directly engaged in the production of fossil fuels. Now that you've learned the basics of ETFs, let's talk about the pros and cons of investing in them. Starting with the first benefit, which is diversification. ETFs allow you to buy a basket of shares or assets in a single trade. This can help you diversify within an asset class. So instead of just investing in one company, you can invest in 200 companies. Your investment risk is reduced because if one company in your ETF is performing badly, the others might actually be doing well. A real life example of this was back in March 2020, when most travel related companies started falling because of the pandemic. However, a lot of the tech stocks were booming. The second benefit is transparency. Because the fund is listed on an exchange, you know exactly which companies are in the portfolio. Another benefit is low fees. Specifically for passive ETFs, because they usually charge less than 1% in management fees. This is a lot less than other investment funds, which might charge 2% plus an additional 20% on the profits they make. Do keep in mind that when you're purchasing an ETF, there will be a brokerage fee which can vary from $5 all the way up to $20 per trade. Another benefit of ETFs is that they're easy to trade. As I mentioned earlier, ETFs are traded on an exchange. This means you can buy and sell whenever the exchange is open. For the ASX, that's usually between 10 a.m. to 4 p.m. Monday to Friday. Unlike other investment funds, ETFs don't have a minimum investment of thousands of dollars or even millions of dollars for hedge funds. For most brokers, you can purchase your first ETF for as little as $500. High liquidity. Generally speaking, most ETFs have high liquidity, which means if you wanted to get rid of them, aka liquidate your investment tomorrow, all you have to do is sell it on the exchange. This is really quick compared to, say, an investment property, which might take months and months to sell. Like with any investment, there will always be some risks and disadvantages. The first one for ETFs is market risk. Just because an ETF is diversified by containing a range of different shares, it can still be susceptible to market risk. So let's say you bought an S&P 500 ETF and there was a pandemic which caused the whole US stock market to plummet. Well, the price of your ETF would have also fallen. Another negative of ETFs is tracking errors. Even though an ETF will try their best to track an index, they're not going to match it exactly the same. This difference is known as a tracking error. Tracking errors can occur for a number of reasons, including currency hedging or changes in the index. Now that we've gone through the pros and cons of investing in an ETF, let's talk about what you should consider when you're picking an ETF. First factor is risk. ETFs can actually vary in risk. Generally speaking, passive ETFs that track an index are less riskier than their actively managed counterparts. Another factor to consider is fees. ETFs have two main fees. The first one is the brokerage fee, which is charged by your broker every time you buy or sell an ETF. The second is a management fee, which is calculated as a percentage of your balance, usually on a yearly basis. Management fees for ETFs can vary depending whether it's actively managed or passively. Lastly, you should consider the performance of the fund. Take a look at the performance over the last year, last 5 years, the last 10 years. Now, don't forget though, past performance is no guarantee of future results. So now that you've done all your research about ETFs and you want to actually invest in them, well, how do you go about doing this? Well, you can buy and sell units in an ETF through a broker, such as ComSec or NabTrade. It's essentially the same as buying and selling shares in a company. All you need to do is look up the ASX code of the ETF you want to invest in and place your order. Currently, the only ETF I own is the ARK Innovation ETF, ticker symbol ARKK. It's listed on the New York Stock Exchange and the fund is actively managed. The fund looks for technology companies that, quote, cause disruptive innovation. I invested in ARK back in August 2020, and as of filming this video, which is 5 months later, I am up a whopping 57.12%. Definitely going to make a video about why I invested in ARK, so make sure you subscribe to this channel. Thank you for watching. I hope you found this beginner's guide to ETFs useful. If you did, make sure to leave a like and subscribe for more videos about personal finance, investing, and saving money. As always, an important disclaimer, I am not a financial advisor, this is not financial advice. This video and my channel is for general information only. As with anything in life, you should do your own due diligence and seek independent advice.